Welcome to The Deep Dive, your shortcut to being well-informed. Today we're jumping straight into Insight Molecular Diagnostics, ticker IMDX, and their Q2 2025 earnings call.
Yeah, and this wasn't just any call. You could argue it was, well, pivotal for them. Really marks that shift from pure R&D into pre-commercialization for their kidney transplant monitoring tech.
A really critical phase.
Absolutely. And we need to frame this right from the start. I mean, you saw the stock reaction, right? Big jump, over 40% after the call.
Despite financials that, looked pretty lean on the surface.
Exactly. And that reaction tells you the market heard the strategic clarity from management and frankly liked it. So our mission here is to distill what drove that confidence. The FDA timeline, the financials, and maybe most importantly, that key tech differentiator.
Okay, let's unpack that. Starting with the financial reality, as you said, lean revenue. Total was $0.52 million. Small number, but it is a five-fold increase year over year. Mostly lab services, $0.49 million. And a tiny bit, $0.02 million from kitted products. That's the first RUO kit revenue, right? Research use only.
That's the one. And look, is $0.52 million just noise? Or is there a signal? I'd argue it's absolutely a signal.
Okay.
Yes, the GAAP loss was $9.7 million. That's minus $0 cent to EPS. Non-GAAP operating loss, just under $6 million. But these are expected losses. It's R&D burn.
Right. Necessary spend.
But the signal for the future. Look at the gross margin on those lab services. Improved to 67.6%.
Wow, up from 62% in Q1.
Yeah. For a company betting its future on selling an efficient kit, hitting nearly 70% gross margin now, that sets a really high bar for profitability once they launch commercially.
That is encouraging. But let's talk burn rate. Operating expenses jumped $10.2 million total. How should we think about that against the low revenue? Seems like heavy spending.
It does, but it's entirely justified spending. Management was very clear about this.
Okay.
That OpEx jump is the sound of them executing, not wasting cash. R&D up 12%, quarter over quarter, sales and marketing up 21%.
So where's that going?
Directly into getting that FDA submission ready. Things like compliant software development, regulatory consultants, which aren't chief trial operations. They have to spend now to hit that mid-2026 launch target.
And crucially, the balance sheet supports it. They finished Q2 with $26 million in cash.
Exactly right. Net cash used in operations was $6.3 million. That tracks perfectly with what they told us before, about $6 million burn per quarter.
So no surprises there.
Nope. They did guide maybe slightly higher burn in Q3 as they finalize the FDA package, but then it should drop back in Q4. The big takeaway here is they're funded through the critical period. Submission, review, initial launch. Funding risk is off the table for now.
Okay, good. With financial stable, let's shift focus to that delivery schedule. The FDA timeline for GraftAssureDx, the kidney kit, what's the latest?
Management stood firm. Still targeting submission to the FDA by the end of this year, 2025.
That's the big one.
That's the deadline driving everything. And what seemed to boost market confidence was the detail about their latest FDA meeting, their third one. They described it as getting precise questions and really clear guidance. Someone on the call even used the phrase yellow brick road to approval. Sounds productive.
Okay, so if they submit end of year, how long for the review? What are they budgeting?
They're budgeting 6 to 7 months for the FDA review itself. So if they hit that end of 2025 submission...
Quick math puts earliest approval end of Q2, maybe early Q3, 2026.
Exactly. Which lines up perfectly for that big revenue ramp they're planning for the second half of next year.
That 6 to 7 months feels intense. The pressure inside the company must be huge, basically betting the farm on hitting that deadline.
No doubt. But they're not just working on the product pass, right? They're prepping the market too. That land and expand strategy.
Right. Tell us about that.
They're officially in pre-commercial mode. The initial land part is selling those RUO kits to transplant centers.
Research use only.
Yeah. And that's done 3 things for them. 1, gets lab staff familiar with the test, the workflow. 2, these big centers generate research, papers, using the kit, which builds credibility.
And 3,
they get real-world feedback, which, they said, directly led to improvements in the Gen 2 kit, the one that's actually going to the FDA.
Smart. So where are they with site engagement? That's where the rubber meets the road, right?
For sure. The goal is 20 sites trained on the workflow by year-end 2025. Right now, they have 10 sites already running the RUO assay.
Where are these sites?
US, Europe, Southeast Asia. Pretty good geographic spread. And maybe more importantly, they have 4 other major US hospitals supporting the actual clinical trial.
Like who?
Big names. Mayo Clinic, Cleveland Clinic, Vanderbilt, Intermountain.
Wow.
Okay, so that's 14 highly engaged centers already. In the transplant world, which is super concentrated around a few hundred major centers globally, getting traction at 14 influential places like that, that's significant progress.
Okay, but you know how slow hospitals can be to adopt new things? Is management being a bit optimistic about how fast this engagement turns into actual sales in 2026?
That's always a fair question. Hospital adoption cycles can be long.
Right.
But two things work in their favor here. First, the price anchor.
The reimbursement.
Yeah, their existing LDT version, the lab-developed test, already has a Medicare rate, $2,753 per test.
That's a high anchor.
Very. And management seems really confident they can just bridge to that rate once the kit is FDA cleared and they update the MolDX file. So you've potentially got a pre-trained market and a high established price point.
That pricing clarity helps a lot. But let's get to the core of it. Why would a doctor switch, even with good reimbursement? What's the real difference? The tech moat.
Okay, yeah, this is the heart of the bull case, I think. You have to understand the problem with current tests.
Go on.
Standard donor-derived cell-free DNA tests, the ones dominating the market now, they suffer from a really poor positive predictive value, PPV.
Explain PPV for us.
It's simple. If the test says positive flags a possible rejection, what's the probability the patient actually has rejection? With current tests, that PPV is often only around 50%.
50%, so a coin flip, basically.
Pretty much. Half the positive results are false alarms. And what does that lead to?
Unnecessary biopsies, which are invasive, expensive, risky.
Exactly. It massively undermines the whole point of doing surveillance testing if you can't trust the positive results.
Okay, so what's IMDX's fix? How do they raise that PTV?
It's in their Gen 2 kit and the algorithm they built. They figured out how to measure both the relative amount and the absolute quantity of that donor DNA in the same test run.
2 measurements instead of 1.
Right. Think of it like checking 2 different security sensors instead of just one. And the data they presented at recent conferences showed this combined score pushed the PPV up close to 80%.
80%. That's a huge difference, going from a coin flip to 80% certainty.
It's a potential game changer. Eliminates the majority of those false positives.
Is this data solid, though? I mean, is it just their internal study, or has it been validated? What are the potential holes competitors might poke in it?
That's the critical question, absolutely. The data looked robust, presented at major meetings. But the real test is that it formed the basis of their FDA submission.
So the FDA is scrutinizing it right now, essentially.
Or will be very soon. Management is clearly betting heavily that this data holds up under that intense review. If it does, the clinical value is obvious. Fewer unnecessary biopsies. That delivers on the core promise of this kind of testing.
And commercially, they believe this gives them a real edge, a significant hurdle for competitors.
That's the idea. It potentially sets a new performance bar that others would need to meet for follow-on clearances. It's their immediate moat.
Interesting timing, too, with that MolDX draft guidance.
Yes, perfect timing. MolDX, the Medicare contractor, put out draft guidance suggesting more formalized surveillance schedules, like 4 tests in year 1 post-transplant, 2 a year after that.
Which validates the need for frequent testing.
Exactly. It validates IMDX's market sizing and shows the whole field is moving towards regular surveillance, which is precisely the market that needs the high PPV test like theirs, ideally.
Okay, the kidney story seems clear and strong, but they talk about being a multi-organ platform. What's next after kidney?
Yeah, they were clear. They see a path to expand quickly. Heart transplant seems to be the next logical step.
The low-hanging fruit.
Kind of. Requires less investment than starting from scratch, mostly generating the specific clinical data. And they said they're already working with the #1 heart transplant center in the U.S., planning to enroll right after the kidney trial wraps up.
And beyond heart.
Lung transplant likely follows heart. Liver transplant, they flagged as being a heavier lift.
Why's that?
Requires more complex longitudinal monitoring, different endpoints, so that's longer term.
Yeah.
And then there's therapeutic monitoring, using the tech to track drug effectiveness. That's an ongoing opportunity, but it seems more dependent on pharma partners pulling them into studies rather than IMDX driving it internally right now.
Okay, we've covered the tech edge, the financials look stable for the plan, and the roadmap seems aggressive but clear. Feels like time for our final segment.
Right. So the core question becomes, you've got this clear FDA timeline converging with this potentially game-changing PPV data. How might an experienced investor, play this specific setup?
Okay, reminder everyone, this is the deep dives. This is not financial advice segment. We're pitching an outrageous but plausible trade idea based only on the information we've just discussed from the earnings call and related materials.
All right, so the setup first. Acknowledge the stock move. It jumped significantly, 41% to about $3.68 as we record this.
Yeah.
That reflects the market digesting that FDA clarity and the potential of the 80% PPV data.
So some good news is priced in?
Some, yes. But the biggest catalyst, the actual FDA submission getting accepted for review, that's still ahead of us, end of this year, early next. So the pitch. Establish a high-conviction long position in IMDX now.
When would you target holding through?
The play is specifically timed. Hold through Q4 2025 and Q1 2026. It's a direct bet on them successfully hitting that FDA submission timeline.
Okay, that's the trade. What makes it outrageous but plausible?
The outrageous plausibility hinges on just how disruptive that 80% PPV could be if it's validated by the FDA. Combine that clinical advantage with the already established $2,753 reimbursement anchor from Medicare.
And the MolDX tailwind pushing for more testing.
Exactly. If all that lines up, IMDX could potentially start stealing market share from the big incumbents who dominate about 90% of the current, mostly centralized testing market, much faster than anyone expects. Faster than typical market adoption curves.
So the trade is essentially front-running the yellow brick road, becoming regulatory reality and leading to faster than expected market disruption.
That's the idea. You're betting that narrative becomes fact by year-end or early next year, and the market hasn't fully priced in the speed of that potential shift yet.
Got it. Okay, let's quickly recap the key takeaways for you, the listener. First, the FDA submission timeline for GraftAssureDx kidney kit looks firm. End of 2025 target reaffirmed.
Second, that differentiated clinical data. The potential for an 80% PPV tackling the big false positive problem that plagues current tests. That's the technological moat.
And third, strong pre-commercial groundwork. They've got 14 key transplant centers already engaged with the assay ahead of that planned 2026 launch.
So here's the final thought to chew on. Put it all together. You've got the MolDX guidance potentially driving more routine surveillance testing. You've got IMDX potentially offering a test with an 80% PPV, making that surveillance much more reliable and less prone to causing unnecessary biopsies.
Right.
So if clinical practice does shift towards more frequent testing because the tests are suddenly much more trustworthy thanks to tech like IMDX's, how fast could a company with a decentralized, easy-to-use kit really eat into the market share of those established central labs?
That speed of disruption is the big question.
It really is. Something for your own further research.
Absolutely. Thanks for joining us on this deep dive into Insight Molecular Diagnostics. Just a reminder, we've summarized information from public corporate disclosures and related research. We are definitely not offering financial or investment advice. Please continue your own due diligence.